Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today, we have with us Marshall Moore, who's a loan officer with Spire Financial. Marshall, welcome to the program.
Thank you so much for having me. Excited to be here.
You're welcome. I love learning from different people and their background and perspectives. And the first question I always love to hear, which really sets the tone, is what's your story? What's your background? What got you into the mortgage industry in the first place? Because probably you weren't in second grade doing career day going, I hope one day to become. So what's your background?
Absolutely. Yeah. I think that my background is a little bit unique in this space. I have done a number of different things in my life. I actually started my career as a scientist. My degree was in biogeochemistry. And I had a piece of advice from my undergraduate advisor where she basically said, I don't want you to go right back into your PhD. I want you to go out and experience the world for 1 year, because if you go and get your PhD immediately, you will be in academia forever. And you do great in academia, but I also think that you would enjoy being out in the real world, let's call it.
Interesting.
And so that set me on a little bit of an interesting trajectory that ultimately I ended up teaching AP chemistry for 1 year. That was, intriguing enough that it turned into 9 years of being a teacher. Wow. So basically the thing that really hooked me was trying to make curriculum be a little bit more real world and applicable to students' lives. And that pretty quickly transitioned to me saying, you know what, I'm going to take on the ultimate challenge of teaching math in a way that is real world and connected. So I ended up doing that for 6 years. During my first year of teaching second semester seniors, I just had this moment of, what are we doing here? Well, why are we trying to teach conic sections that I know, if you're a nerd like me, that's a very interesting puzzle to be solved, but I know that you all will not use these again in your lives.
In real life.
So, yeah, exactly. Yeah. Unless you're in a very specific field. If you're an engineer, then of course. But, for the most part, this was not going to be something that my students would ever use. And so I basically, at first, it was a little bit of a renegade thing where I changed the curriculum to be a financial literacy curriculum. And after I had run it for about a month, I approached the principal and told him about what I was doing, and he was all on board with it. And so I ended up developing that course over the span of 6 years. It was fantastic for me. But really the big thing that happened was really two things. First of all, it won an award from the Colorado Department of Education, which of course made me feel good. But the thing that it really did was it made other teachers know about what I was doing and ask, hey, can we come into it and do an after school session to plan our finances? Because we need help in this regard. We don't have these conversations in our society. People are left to figure it out on their own. So I think that was the thing that really got my mind turning about how I could be in this space helping adults. And ultimately, it was the mortgage world that I found myself in. And, there was a big reason why I ended up in the mortgage world instead of becoming a financial advisor, which is sort of twofold. First of all, for the most part, a lot of financial advisors do have minimums where, you kind of have to have $250,000 or $500,000 before you're going to work with a financial advisor. And I wanted to know, where am I going to work with my people, with teachers and with people who need the help more? I wasn't necessarily set on only working with high net worth individuals already. And so the second big piece of information was, goodness, I had been teaching this course for the last 6 years. My wife and I had bought our own house. And, over the span of, I bought it right around when I started that curriculum. Over the span of those 6 years, obviously, we, of course, did very well with our home purchase. I overall believe in the power of home ownership, because it's just, we see too many people who are able to get out of the rent cycle, stop paying their landlord's mortgage, start building equity in their own house, and let appreciation do its thing. And it changes their lives. It starts them on their wealth building journey. And I saw an opportunity there for me, because the mortgage world, I don't think, has a stellar reputation as being advisors for helping people to grow their wealth. It's more transactional. So I saw an opportunity and jumped in.
Wow.
That's awesome. You intrigued me when you talked about that financial literacy in the high school. And I've looked at your website, and you talk a lot about education and helping those high school students and all. Can you elaborate on that a little bit more? Is that being taught on a regular basis in high school, or what's happening there?
There are some areas where there are strides being made. I myself, before kind of pivoting to go into the financial world directly and just be able to make a direct impact, I looked around for a while to figure out how can I help to make more schools make this a required curriculum. Like financial literacy should be taught in every high school in America. I actually think that there should be a couple of other courses as well, including a basic course on how houses work. Everybody should know that, you know? Mm. But overall, I personally, and I don't mean for this to sound like a reflection on the state of the industry or anything like that. But for me, I got to a place where trying to make that sort of change felt like I was bashing my head into the brick wall of bureaucracy. And I sort of got to a place where I said, I'm trying to change the country, but I could redefine my view of, like I think I had always wanted to change the world. I think a lot of us want to change the world, right? And I think I was redefining my view of changing the world or changing the country. And I was redefining it to say, you know what, I'm going to change the world by helping the people right in front of me right now. I'm redefining the world to be the people that I am talking to, who I am present with right now. And that's been fantastic. That's certainly more so the world that I live in the mortgage world, but you get to actually see the gains that people are making. And of course, over time, you let appreciation do its work, and a mortgage payment remains fixed. And so, several years later, after folks buy a house and they're ready to do their move up or whatever it is, you get to really see the impacts. Whereas I found for me in the broad scale, trying to make changes on kind of a more national level, I still have hope that it will happen, but I think it's going to be a very long process.
Maybe more boots on the ground like what you're doing. And,
exactly.
Yeah. Change it from the bottom up.
And, in many respects, I see that's kind of what I've made my business be revolving around at the end of the day is you can probably imagine this from what I've said so far, but I really do see a lender and a real estate agent as in many respects being the only financial professionals that people under 40, maybe 45 years old generally talk to. Of course, maybe you get somebody who's self-employed and they have a CPA, or maybe you get somebody who has a family financial advisor. But for the most part, we are the financial professionals that talk to younger folks, and therefore we have the greatest ability to impact the most people's lives in the future. But it does require that we do a couple of things, one of which is that we be at the top of our games in terms of our understanding of financial principles. And then secondly, it also really does require that lenders and realtors create strong teams together, because at the end of the day, our business is, it's all about communication. And communication is so simple and yet so challenging to execute on consistently on an everyday basis, right? So,
Marshall, it's apparent that you are passionate about what you do. You're enthusiastic, and that's wonderful. And let's put the teacher hat on. And I've got a question based on what you were saying here. You get teachers, or in your case, mortgage professionals that are very knowledgeable, and you've got a head full of knowledge. And here comes this client, this first-time home buyer, or a borrower, and you can't just data dump boom, everything all in one whack because it's way too much. Same as a student. You can't just dump everything about financial literacy into one session or even, a week or two. It's got to be sequential, and it's got to be an educational process. So talk a little bit about how you help your clients who are borrowers, whether they're first-time home buyers or refinance, but your clients understand the process and feel like that you are guiding them through so that they're understanding all along the way.
Totally. Yeah, this is a great question because I am totally that person who wants to put on my nerdy math brain and just sort of dive into data and nuances and then things like that. But at the end of the day, it's really not about that. I think really from a broader financial perspective, one of the things that I talk about with folks is that, goodness, in our financial lives, we like to think that it's all about what actions are we taking, but that at the end of the day, every single one of us has some form of money mindset, or one might even call it money baggage, that we've inherited throughout our lives, whether it be from our parents or just from the community that surrounds us, that if we don't understand some of the ways that that's influencing our decisions and our perceptions, then it doesn't matter how much data we have in front of us. We as human beings, we can't figure all of that out. So for me, I think really the process starts with an understanding of that, and of the fact that, often as human beings, we want certain results. And so in order to get those results, we change our actions. But so often we're doing the different action and we're not getting the result that we desired. And that's often because the actions are driven by our underlying beliefs, or
Yeah.
even our identity that's underneath that. So sometimes and this is absolutely what you're talking about. This is very much the sort of the deeper work that takes a little bit longer. But that for me is kind of the starting place. So to bring it to a more specific process, what I'm really focused on right now in that is not necessarily getting home buyers excited about buying a house. Like, in some ways, that is the job of a real estate agent or a lender, right? We want to get you excited about buying a house. For me, I'm really focused on getting them clear on what goes into the process of buying a house, and understanding that, as well as understanding the huge benefits that come from it. So that is really striving to make their beliefs about why they're doing this be much more grounded in the reality of, the numbers behind buying a house first, because then that's ultimately what gets us as home buyers to a place where our actions actually lead to the results that we're looking for, rather than, kind of going off course a little bit. So there's a couple of things that I do for that, but I'll let you digest that and ask questions
Well,
based
yeah,
off
thank
that.
you. Yeah, that's really great observation, because I wanted to really pin down the word why, because you use that a couple times, and I think what you just described there is so essential, because when a borrower knows the full picture, the why they're pulled toward that, they don't feel pushed to do certain things. And there's things in the process of buying a home, refinancing a home, with paperwork and minutia that get to be overwhelming. But yet, if they didn't really realize where they're headed and that why and that end result and that transformation, then they could get bogged down with it. But if you lay that groundwork and that mindset in place first, then all those little teeny little things that aren't super fun, they're like, okay, well, I got to do it to get to my end result. So I think that's really great the way you clearly laid that out.
Yeah, totally. Absolutely. Yeah. And, again, if I can put on a little bit of, just because, I imagine this type of a show it is more listened to by real estate professionals than perhaps first-time homebuyers. So if I put on a little bit of my nerdy hat and describe some kind of what's happening underneath the surface here, it's the fact that, there's these two economists, well, really, they were behavioral psychologists named Danny Kahneman and Amos Tversky, who created this field of behavioral economics. And basically what they said is, we as human beings, when we have too many different data points in front of us all at the same time, we don't sit there and analyze every single data point and come up with the best decision that, to use their words, quote, optimizes our economic utility. It's like, no, we're human beings, right? Like we make emotions based off of decisions. And typically how we do that is we create mental shortcuts. Mm-hmm. So, these mental shortcuts, they called them heuristics, but basically we'll create these mental shortcuts that if they can get us to the right answer 90% of the time, then that's great. But there are that 10% of the time, or maybe even larger, I don't know what the percentage is, where those mental shortcuts actually lead us in the wrong direction systematically. Like every time they lead us in that wrong direction. So
because
largely,
when you confuse, you lose.
Yeah, yes, absolutely. And so for me, largely that is a big part of it is really trying to talk about some of the complexity of the real estate industry, but bring it down to a level that it makes sense to people. So, at the end of the day, a real estate transaction just simply has more layers of complexity to it than putting an item in our Google shopping cart and clicking buy. And people need help to break that down and understand it. So that's a large part of my process, is having those conversations.
I love it. That is spectacular. And I think that anybody can fill out a form or an app or a this or talk about, all the details of the process. But when you can realize that there is, like that underlying belief system in there, and you could probably, with your work you've done in the last, you've been teaching high schoolers, you can probably look at certain indicators in a borrower and kind of know which way to kind of guide so that they don't get confused. So I think that is spectacular. Let's kind of shift gears and wrap up with this thought process, which is what are you seeing in the housing market right now? What are you guiding your clients to do? Are you working mostly with buyers or first-time home buyers or investors? What does that look like?
Yeah, totally. So what I'm seeing in the housing market and who I'm working with. So let me first of all just state I do love working with two groups in general. I love working with first-time homebuyers and with investors. Big thing on the first-time homebuyers for me, it's really because I love the process of education and just getting somebody really comfortable and set up for their first transaction, which is generally the biggest transaction of their entire lives. Investors for me are very fun because I personally am an investor, and you do get to nerd out a lot more on how do you analyze an investment property and really dive into some of the things that are important. Is cap rate really that important, or is it kind of a metric that has simplified everything to one number that's easy to look at, but might not tell you about some of the nuance that you would be interested in seeing, right? So those, I think, are kind of my two big groups that I work quite a bit with. Within those groups, I will say that I'm oftentimes just trying to bring up conversations that maybe have possibilities embedded in them that people hadn't thought about previously. So, with first-time homebuyers, one of the common scenarios that happens out there is, and I guess there's a few ways that this scenario happens, but one of them is that a first-time homebuyer starts looking at places before they actually contact a real estate agent or a lender. And so, as we all know, sometimes they are looking at prices that are a little bit above their price range. Sometimes, in the industry, we call this a little bit of a joke. They have champagne taste on a beer budget. But basically, what I like to do with that process is to really help people think about it in a different way. Because as we all know, people can get disappointed by the fact that, oh my goodness, I was looking in this particular price range, and now it seems like my maximum purchase price is a little bit lower than that. But in reality, that opens up a ton of doors for people. So a lot of times, some of the conversations that we are having is talking about broader scale financial principles, and specifically the options in front of them, like being able to house hack. So, I use that term, but specifically what I'm talking about is if somebody is specifically wanting a single family home, a first time home buyer, and it turns out that, goodness, it's just looking like it's not quite in their price range. I love to talk about the idea of, what would happen if you were open to the idea of finding a townhome that you perhaps hold on to for, you have a 3 to 5 year plan to be able to do a move up purchase, retain that home, start renting it out, and have passive cash flow coming in. So just opening up some of those ideas is always fun with some of those first time home buyers.
Yeah.
The second question.
I was just gonna say that's a huge eye opener, and it's almost like that when you give them the path forward past just even that first home or options they haven't thought of, boy, their impression of you as that guide, educator, trusted advisor just amplifies that much more.
Totally. And when you run the projections, the actual numbers on, projecting that out and putting together an actual 3 to 5 year plan for what that looks like, it really opens up people's minds to the power of housing. At the end of the day, we have set it up in our country to where there are simply advantages to being a homeowner, and taking advantage of some of those can really, of course, just build people's wealth and expand them into the future that they're really hoping to have. But oftentimes, again, we don't have those conversations in our society, so it's not something that people have in the back of their minds already. I certainly didn't have it in the back of my mind when I was a teacher and we bought our first house. And goodness, I wish I could go back and advise myself, but
if we had that Wayback Machine, that would be awesome.
Yeah, exactly. Exactly. Yeah, but I mean, in terms of the power there, just one of the things that's hugely powerful is the fact that a mortgage rate, your monthly payment gets locked in when you purchase the house. It's, the home prices are continue appreciating, rent continues to go up, but your actual purchase or monthly payment, it's not going up. So, 5 years later, when you actually do that move up, the amount that you can charge in rent versus your monthly payment, that sometimes just shocks people to realize the time value of owning real estate.
Yeah.
Yeah, and then there was a second question there, which is kind of what we're seeing in the market right now. And I'll mention that briefly. I'm sure that everybody is talking about it in the same way, but at the same time, perhaps this description might be somewhat helpful for folks out there. I said earlier that when we buy a house, these transactions are just more complicated than, putting an item in your Google shopping cart and clicking buy. And one of the reasons that that's true is because there is this intermediary layer of pricing for the majority of home buyers out there, which is they have to use a financial instrument in order to be able to purchase the house. That financial instrument is a mortgage. Mm-hmm. And so that intermediary layer of a mortgage, if the price of that goes from, I don't know, let's say 2.5% to 7.5% in 6 months, then
like that would ever happen.
Got insanely more expensive, right? And so we might expect that the price of the product itself, because of that intermediary layer, less people are going to want to buy it. And therefore, we might expect that the price of that product drops significantly. So right now, we might expect that home prices are down 20-30%, just like the stock market. And yet we're not seeing that. And the question is why? And the answer is pretty simple. We're all seeing it. It's inventory. We do not have the same number of houses that would support the number of people who would like to buy one right now. And that's something that you can look back at the data through the years in terms of demographics. So when we look at demographics, what we're generally doing is we're looking at the births by generation from 33 to 34 years before the moment that we're looking at. So the reason that we use that time is because that's the average age of a first-time homebuyer. And we're looking at the births by generation to see what might we expect in terms of household formations in 33 or 34 years as people are moving off on their own and starting to buy their own houses. And, at the end of the day, what we're seeing is that 2008 really messed us up. And there were a lot of reasons for that, along with the fact that loans were being written that were just not appropriate in terms of levels of risk, to make an exaggeration here, back in the day, before I was even in the industry, of course, it was sort of one of those things where it's like, 500 credit score and 0% down, sure, let's do it. That sets up a really dangerous situation in the economy. But then on top of that, we also had this decrease in household formations. And that's very evident in the data from 33 years before. But at the same time, we saw that decrease and builders didn't catch on to the data. They kept building. And, we ended up in the situation where in that case, the housing bubble caused the recession, not the other way around. The recession didn't cause the housing crisis. It was the other way around. And so, right now we find ourselves in a place where if people are wondering what the future of the housing market looks like, well, inventory is our big issue, and we cannot build houses fast enough to fix this issue in the next 10 years. And so, home prices will remain supported despite the fact that interest rates are higher. And in terms of the interest rate outlook, we don't foresee them going back ever necessarily to those 2.5% or 3% interest rates. That was largely brought on and helped by the Fed buying up $35 billion of mortgage-backed securities every month. And so with that in mind, we're really looking at our strategy moving forward, knowing that it is incredibly important that we get our first-time homebuyers into houses now, really, before we continue to see continued appreciation and continued lack of inventory. So that's kind of what the basis of our long-term strategy, I suppose, is right now. That's not, of course, getting into the specifics about how investors are pricing certain interest rates and what our refinance strategy is and those things. But
and that's
kind of the over.
Yeah, that's a huge point, Marshall, because no matter what the rate is today, we don't need to mention rates today because next week they might change and next month they might change. And whatever the rate environment is, it's going to be fluid and moving up and down and all around. You just need to make the best decision for you in that moment. And that's where you come in with your process and your education and your teaching spirit. And I think that's where people need to go, wow, thank you for helping me understand. Now I'm going to make the best decision for my family now for this investment, for this first home that I'm buying. So I think that is just spectacular what you do. And I love your approach to serving your clients. And so let's just wrap up with this. If someone is listening to this going, hey, let me learn more about what Marshall can do for me. What's the best way they can reach out and connect with you?
Yeah, right now, as strange as it is for me to hear these words coming out of my mouth, I have really leaned into Instagram. So if they find me over Mortgages with Marshall on Instagram, that is really the biggest platform that I'm trying to just put out very short little educational tidbits. And I think they'll get a lot out of that. And I encourage folks to reach out, shoot me a DM on Instagram. I'm pretty responsive there. And of course, if they'd like, they can always shoot me an email or give me a phone call. Happy to connect.
Excellent. Well, Marshall, thank you so much for coming on. It was a real pleasure talking with you today.
It was a pleasure to speak with you all as well.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.